Let me be crystal clear. The world you think you understand about money is collapsing right now. If you're watching this and thinking it's just another geopolitical story, you're already behind. This isn't far-off politics. This is a direct threat to your savings, your retirement, your lifestyle, and the price you pay at the pump. Watch closely, because the truth you're about to hear threatens the very foundations of how modern finance actually works. Here's the brutal truth. The era of the U.S. dollar ruling global oil markets, the petrodollar, is rapidly eroding. And what's happening with Venezuela is a symptom, not an anomaly. This system has underpinned America's financial dominance for decades. It has allowed the United States to borrow trillions with rock-bottom interest rates, to run deficits that would make any sane accountant cry, and to spend money it literally doesn't have. But that era, it's waning. Let me be clear. If you ignore this, that's on you. Why does the petrodollar matter to you? Because it's not some academic label. It's the backbone of the dollar's global demand. Every major oil-producing country agreed, formally or tacitly, to sell oil primarily in U.S. dollars. That meant countries around the world had to hold massive quantities of U.S. currency and U.S. treasuries just to keep their economies running. That global demand for dollars helped keep U.S. interest rates low. It supported the power of the U.S. Treasury. It subsidized your government's ability to spend and borrow. That's massive leverage. That's power. Most people won't like hearing this, but it's the truth. Now let me break another uncomfortable truth. That preferential system is breaking down. Countries like Venezuela, long sanctioned and isolated, started selling oil in other currencies like China's yuan, euros, and even barter arrangements. That's not some fringe plan. It's a dangerous precedent. Venezuela is far from the world's largest producer today, but it sits on the largest proven oil reserves on the planet. That means it has the potential to challenge the dollar's role in energy trade, especially when it starts dealing outside dollar dominance. What Venezuela is trying to do, selling oil outside the dollar system, is exactly the fear that keeps policymakers awake at night in Washington. It's why recent developments aren't just political drama. They're part of a strategic financial battle over the future of money itself. And if you think this doesn't affect your wallet, think again. Ask yourself this right now. What happens to the dollar if countries don't need as many dollars to buy oil anymore? Because make no mistake, oil is still the world's most traded commodity. When it's priced in dollars, foreign governments must hold greenbacks. When it's not priced in dollars, that demand evaporates. Suddenly, the U.S. can't borrow cheaply anymore. Suddenly, interest rates spike. Suddenly, your savings, your mortgage, your credit card rates, they feel that shift immediately. And let's be honest, the U.S. isn't sitting back and watching this unfold without reaction. Recent moves in Venezuela, including military, economic, and diplomatic pressure, aren't just about restoring democracy or fighting corruption. The fact that Venezuela's oil revenue and contracts were being diverted away from the dollar system triggered alarm bells in Washington, because every dollar that bypasses the U.S. financial system weakens American leverage. Here's the harsh reality. If you think you have time to figure this out later, you're wrong. The dynamics of the global reserve currency don't flip overnight. They dissolve over years. But once the rot begins, it accelerates faster than you can react. The loss of petrodollar dominance means less foreign demand for U.S. debt, higher borrowing costs for the U.S. government, rising inflation at home, and a geopolitical scramble that will impact oil prices, currency markets, and global trade flows. Let me be explicit. This isn't just another market cycle. It's a structural shift. And if you're not paying attention, you could be blindsided by the consequences: spiking interest rates, plunging purchasing power, and real losses in your investments. Ask yourself, if I had a warning 3 years ago about this shift, would I ignore it? Of course not. Yet most people will shrug this off because this isn't on their radar. Not yet. So let's break this illusion right now. This is not distant geopolitics. This affects your money, your future, your financial security, and if you continue watching this video right to the end, you will understand not just the surface story, but the underlying forces driving global finance today. Let me be clear. This entire global financial system runs on confidence. Not morality, not fairness, not truth. Confidence. And once confidence cracks, everything built on top of it starts to shake. Venezuela didn't create this problem. It exposed it. And most people still don't understand what just happened. Here's the illusion you've been sold your entire life, that global finance is stable, rules-based, and managed by adults in the room, that there's a referee. That debt doesn't matter. That reserve currency status is permanent. That illusion is dead. Venezuela is proof. For decades, the system worked like this. Play by the rules, sell oil in dollars, recycle those dollars back into U.S. treasuries, and enjoy access to global markets. Break the rules, and the system squeezes you, not slowly, immediately. Banking access disappears, insurance vanishes, shipping gets complicated, capital freezes. This isn't theory. This is how power is enforced. Now here's the part most people won't like hearing. The system only works as long as there is no alternative, and for a long time there wasn't. If you wanted to sell oil at scale, you used dollars. If you wanted to store reserves safely, you bought U.S. debt. End of story. Venezuela broke that assumption, not because it wanted to start a revolution, because it had no choice. Sanctions cut Venezuela off from dollar-based settlement systems. So they adapted. They started accepting other currencies. They leaned into bilateral deals. They experimented with yuan settlements, euros, gold swaps, even direct commodity exchanges. Was it efficient? No. Was it clean? No. But it worked well enough. And that's all it needed to do. Let me ask you a question you should be asking yourself right now. If one sanctioned, mismanaged, politically unstable country can sell oil without dollars, what happens when larger, more organized players do the same? That's the real threat, not Venezuela. Contagion. Because once the door is cracked open, others walk through it. Russia noticed, Iran noticed, China noticed, and let me be brutally honest here. China has been preparing for this moment for decades. Currency swap lines, alternative payment systems, strategic commodity reserves, long-term energy contracts priced outside the dollar. This didn't happen by accident. Let me be clear again. The petrodollar system was never guaranteed forever. It was an agreement built on trust, military power, and economic dominance. And dominance erodes, always. History proves that. Now here's where people get it wrong. They think the end of the petrodollar means the dollar collapses tomorrow. That's nonsense. That's clickbait. That's fear porn. That's not how systems die. Systems rot slowly. Then suddenly, what Venezuela revealed is that the enforcement mechanism of the dollar is weakening. Sanctions used to be nuclear weapons. Now they're dull knives, still painful, but survivable. And when sanctions lose power, the currency behind them loses leverage. This is the part where I need you to pay attention. The U.S. runs massive deficits, trillions, year after year. That only works because the world absorbs that debt. Foreign central banks, sovereign wealth funds, pension funds, they all buy U.S. treasuries because they need dollars for trade, especially energy. But if energy trade shifts, even partially, away from the dollar, that demand weakens. And when demand weakens, borrowing gets expensive. When borrowing gets expensive, governments have two choices: cut spending or print money. Let me be brutally honest. Politicians do not cut spending. They print. And when they print, inflation isn't a theory. It's a tax. A silent one. It eats your savings, your wages, your purchasing power. You feel poorer even if the numbers in your account look bigger. That's how you get robbed legally. Most people watching this still think inflation is temporary, that it's cooling, that central banks are in control. Let me be clear. Inflation is structural when the reserve currency system weakens. It's not a supply chain hiccup. It's a consequence. Now let's talk about why Venezuela specifically matters beyond oil. Venezuela sits at the intersection of energy, geography, and ideology. It showed the world that survival outside the dollar system is possible. Painful, yes, but possible. And that alone changes the calculation for every country that doesn't want to live under U.S. financial influence. Here's the dangerous mistake investors make. They assume global coordination. They assume rational behavior. They assume cooperation. That's not how this ends. What actually happens is fragmentation, regional blocks, currency zones, trade agreements settled locally, less efficiency, more friction, higher costs, slower growth, more volatility, and volatility always hits the middle class hardest. Let me say something that will make a lot of people uncomfortable. This transition does not benefit workers, savers, or retirees. It benefits asset owners, resource controllers, and governments that can manipulate currency flows. If you're sitting in cash trusting that your purchasing power is safe because the dollar is strong, you're betting against history. Now let me pull back the curtain even further. Why do you think there is so much noise around Venezuela? Why so much political theater? Why so much attention on a country whose economy has already collapsed? Because it's not about Venezuela. It's about signaling. It's about sending a message to every other energy producer watching quietly. This is what happens when you step outside the system. But here's the problem. The message is losing credibility because despite the pain, Venezuela still sells oil, still trades, still survives. That's the crack. Once confidence cracks, capital starts looking for exits. Not all at once, slowly, incrementally, quietly. Central banks diversify, gold reserves increase, dollar exposure shrinks at the margins, trade invoicing experiments expand, no press releases, no announcements, just behavior. And behavior is what moves markets. Most people will not notice this shift until it's already baked into prices. That's how it always works. The headlines come after the damage. Let me be very direct with you. If your entire financial strategy assumes stability, you are exposed. If your retirement plan assumes low inflation forever, you are exposed. If your savings are parked without understanding currency risk, you are exposed. This is not about panic. This is about awareness. The biggest lie sold to the public is that nothing ever really changes, that systems self-correct, that adults will step in, that someone smarter is in control. History says otherwise. Empires don't announce their decline, they deny it. And the petrodollar system, it's not dead, but it's no longer unquestioned. And that changes everything. In the next section, I'm going to break down exactly how this shift hits you personally. Your housing costs, your investments, your job security, your retirement timeline, not hypotheticals, real consequences. If you're serious about protecting your future, you need to hear it. Let me be absolutely blunt. If you think the erosion of the petrodollar is some abstract macro issue that only affects traders in suits, you're dangerously wrong. This is where it gets personal. This is where your real life gets impacted. Your rent, your mortgage, your grocery bill, your job security, your retirement timeline, all of it. Let me be clear. Currencies don't collapse in isolation. They infect everything priced in them. And when the world slowly needs fewer dollars, the dollar doesn't vanish. It weakens in purchasing power. That's the key distinction most people miss. You don't wake up one day with worthless money. You wake up one day realizing your money buys less than it used to, and then less again and again. That's how the middle class gets crushed quietly. Let's start with housing, because that's where the pain becomes undeniable. When reserve currency demand weakens, interest rates don't stay low. They can't. The U.S. has to compete for buyers of its debt. That means higher yields. Higher yields mean higher mortgage rates. Period. There is no workaround. No policy speech fixes that. And here's the brutal truth most homeowners don't want to hear. Housing prices don't crash because people don't want houses. They stall and then fall because financing becomes unaffordable. That's already happening. You can feel it. Fewer buyers, longer listings, silent panic among over-leveraged owners. If rates stay elevated because global demand for dollars weakens, housing doesn't bounce back quickly. It stagnates. And stagnation is poison for anyone who bought at peak prices assuming cheap money forever. Let me ask you something uncomfortable. Did you buy your home assuming rates would stay low? Did you stretch your budget because money was cheap? If so, you made a bet. And that bet was on the stability of a system that is now changing. Next, comes inflation, and not the kind politicians love to redefine, structural inflation. This is not about eggs or gas for a quarter. This is about sustained pressure on prices because importing goods costs more when your currency weakens. Oil priced outside the dollar doesn't need to fully replace the dollar to hurt you. Even partial shifts raise transaction costs, hedging costs, and currency risk premiums. All of that gets passed on to consumers. That's you. Let me be crystal clear. Inflation is not an accident. It is the consequence of monetary privilege fading. And when that privilege fades, governments don't suddenly become disciplined. They compensate by printing more, borrowing more, and telling you it's temporary. It never is. Now let's talk about jobs, because this is where the optimism really dies. When capital becomes more expensive, companies cut costs. They don't debate. They don't hesitate. They cut. Expansion slows, hiring freezes, automation accelerates, outsourcing returns, and wage growth stalls. At the same time, your cost of living rises. That's the squeeze. Lower real wages, higher expenses. That's how people fall behind without ever feeling like they failed. Let me say something that will upset a lot of viewers. Job security in a deglobalizing, fragmented financial world is weaker, not stronger. Companies lose pricing power, supply chains get messy, currency volatility increases, planning horizons shrink, and who absorbs that uncertainty? Not executives, not shareholders, workers. Now let's talk about retirement, because this is where denial is strongest. Most retirement plans assume three things: stable currency, predictable inflation, reliable bond markets. All three are tied to reserve currency dominance. If the dollar slowly loses demand, bond yields rise, bond prices fall. That hurts pensions, 401ks, and target date funds loaded with fixed income. At the same time, inflation erodes the real value of payouts. Let me be very clear. A retirement plan built for the last 40 years will struggle in the next 20. And pretending otherwise is financial malpractice. This is why you see governments quietly raising retirement ages, adjusting benefit formulas, and encouraging personal responsibility. Translation: the system knows it's under strain. Now here's the psychological trap most people fall into. They say, this all sounds bad, but it's gradual. I'll adapt. No, you won't, unless you understand it early. Gradual doesn't mean harmless. Gradual means invisible until it's too late to reverse decisions you already made. Where you live, how much debt you took on, what assets you concentrated in. Let me repeat something important. This is not about panic. This is about positioning. The people who get hurt in transitions are not the ones who panic. They're the ones who assume nothing changes. Now let's tie this directly back to Venezuela and the petrodollar, because this is where the system-level mistake becomes obvious. The moment oil trade fragments, even slightly, the dollar loses its automatic bid. That forces the U.S. to defend its currency through higher rates or tighter policy. That slows growth. That raises unemployment. That increases political pressure to spend more. It's a feedback loop. And feedback loops don't end politely. This is why you're seeing louder rhetoric, sharper divisions, and more extreme policy debates. Economic stress always shows up as political chaos. Always. Most people watching this are still waiting for a headline that says, the petrodollar is officially over. That headline will never come. What you'll get instead is years of confusion, volatility, and frustration. And by the time it's obvious, the damage is already priced in. Let me say this as clearly as possible. If your financial life is built on assumptions of stability, predictability, and permanent dominance, you are vulnerable. Not because you're stupid, because you were taught a story that worked until it didn't. Now here's where this gets even more uncomfortable. You can't vote your way out of this. You can't save your way out of this with willpower alone. And you can't rely on headlines to warn you in time. What you can do is understand the mechanics, understand why Venezuela matters, understand why the petrodollar weakening is not about ideology but incentives, understand how currency demand shapes your cost of living. Because once you see it, you can't unsee it. In the final section, I'm going to tell you exactly what mistakes people make next. The emotional decisions, the false hedges, the panic moves that destroy wealth during transitions like this. And more importantly, what thinking actually protects you. If you ignore that part, that's on you. Let me be brutally honest to close this out. Most people don't lose money because the system changes. They lose money because they react badly when it does, and the coming years will punish emotional decision-making like nothing you've seen before. This is where wealth is quietly destroyed. Let me be clear. When systems weaken, people panic in predictable ways. They chase safety too late. They chase returns too late. They listen to headlines instead of incentives, and they convince themselves they're being smart while doing exactly what everyone else is doing. That's how bubbles form. That's how crashes hurt the most people. The first fatal mistake is blind trust in old playbooks. People cling to what worked for the last 30 or 40 years, buy bonds for safety, buy real estate because it always goes up, hold cash because the dollar is strong. Let me be very clear. Those ideas were built on petrodollar stability. When that foundation weakens, the rules don't disappear, they mutate. Cash loses silently through inflation. Bonds lose when rates rise. Real estate stalls when financing dries up. None of this is theoretical. You're already watching it happen. The second mistake is political thinking instead of financial thinking. People want villains. They want heroes. They want someone to blame. That's useless. Markets don't care about your beliefs. Money flows where incentives point, not where speeches aim. Venezuela didn't change the system because of ideology. It adapted because it was forced to. Other countries are watching and learning, not protesting. And while the public argues about narratives, capital quietly repositions. If you make financial decisions based on political outrage instead of economic reality, you will lose. Period. The third mistake is mistaking volatility for opportunity without understanding risk. Let me say this slowly. Not all change creates opportunity for everyone. Some transitions reward scale, access, and patience. Others punish leverage, dependence, and rigidity. People hear currency shift and rush into anything labeled alternative. That's how scams thrive. That's how bubbles form. That's how fear gets monetized. Fear is always sold as urgency, and urgency without understanding is expensive. The fourth mistake, and this is the most dangerous, is denial. This sounds like the dollar has survived worse. This will blow over. They'll figure it out. That mindset is how people stay fully exposed while the ground shifts under them. Let me be clear. The dollar doesn't need to collapse for you to lose purchasing power. It only needs to weaken relative to real assets, real costs, and real necessities. And that's already happening. Now here's the part most people expect next, a list of magic investments. I'm not going to insult your intelligence with that. Protection doesn't start with products, it starts with thinking. The mindset that survives transitions like this is simple but uncomfortable. First, stop assuming stability. Assume volatility is normal. Assume policy mistakes will continue. Assume incentives will override promises. When you stop expecting calm, you stop being shocked, and shock is what causes bad decisions. Second, respect currency risk. If all your savings, income, and retirement are tied to one currency, one system, one policy framework, you are concentrated. Concentration feels safe until it isn't. Diversification is not about chasing returns. It's about reducing single-point failure. That lesson applies to empires, companies, and personal finances. Third, understand debt differently. Debt is not evil. But cheap debt was a privilege of a stable system. When that privilege fades, debt becomes a weapon against the borrower. Ask yourself this honestly. Are you using debt because it's productive or because it was easy? Easy debt disappears first. Fourth, stop outsourcing thinking. If your entire financial understanding comes from headlines, social media, or slogans, you are late by definition. By the time something is popular, the smart money has already moved. This is why understanding Venezuela and the petrodollar matters, not because you'll trade oil futures, but because it teaches you how systems actually behave under stress. Here's the brutal truth most people don't want to hear. There is no rescue coming that restores the old normal. There will be adjustments. There will be narratives. There will be temporary relief. But the direction has changed, and direction matters more than speed. Let me bring this home. If you're younger, this determines how you think about career security, debt, and savings. If you're mid-career, this determines how exposed you are to inflation and job volatility. If you're near retirement, this determines whether your purchasing power lasts as long as you do. Ignoring this doesn't protect you. It just delays the pain. Let me be absolutely clear in closing. The erosion of the petrodollar is not the end of the world, but it is the end of complacency. And complacency is what destroys the middle class every single time systems shift. You watch this because you sensed something was off. That instinct is right. Now the question is simple. Will you stay informed or stay comfortable? Because comfort is expensive in periods of change. If this forced you to think differently, do 3 things right now. Like this video so more people actually see it. Subscribe if you're serious about protecting your financial future. And comment below, agree or disagree, because ignoring this conversation doesn't make it go away. Share this with someone who still thinks nothing ever changes. If you care about your money, your family, and your future, you don't scroll past warnings like this. Most people will. Don't be most people.